Welcome back to XRP Matrix. This week may have felt like one of the most confusing and emotional weeks XRP holders have faced in a long time. Everywhere you looked, there was another headline designed to grab your attention and test your conviction. Global tensions escalated, financial markets swung wildly, social media filled with fear, and some analysts began predicting everything from a collapse to massive gains. For many investors, it became difficult to separate reality from emotion. That is exactly what we are going to do today. We are not here to predict whether XRP will go to 10 cents or $27. We are here to look at what actually happened, what matters, what doesn't, and why understanding the connection between XRP and XLM may completely change how you view the future of digital finance. The first thing we need to understand is that market fear often arrives all at once. When geopolitical conflicts intensify, stock markets react. When stock markets react, risk assets react. And when risk assets react, cryptocurrencies usually feel the pressure too. That is exactly what happened recently. Many people looked at XRP's price movement and immediately assumed something was wrong with XRP itself. But when stocks, commodities, crypto assets, and other markets all move lower together, the story is usually bigger than any individual asset. The truth is that XRP's underlying technology, partnerships, and long-term vision did not suddenly change overnight. What changed was investor sentiment. And sentiment can swing dramatically in a matter of hours, while fundamentals often remain exactly the same. While many investors were focused on market volatility, another story was quietly developing behind the scenes. It was not a story about price. It was not a story about hype. It was a story about infrastructure. XRP has spent years being discussed as a bridge between traditional finance and blockchain technology. For a long time, critics argued that the vision was too ambitious. Supporters argued that adoption takes time. Now we are beginning to see evidence that major institutions are taking blockchain settlement more seriously than ever before. This matters because long-term value is usually built through utility, not headlines. The investors who focus only on daily price action often miss the slow developments that eventually become major turning points. But to truly understand where XRP may be heading, we need to go back to the beginning. Many XRP holders know the name Jed McCaleb, but surprisingly few understand why his story matters today. Jed was one of the original architects behind the XRP ledger. He helped create the foundation that would later become one of the most recognized blockchain networks in the world. Yet after helping build XRP, he left and eventually co-founded Stellar, the network behind XLM. For years, many people treated this as proof of a rivalry. They saw XRP and XLM as competing projects fighting for the same future. The reality, however, is far more interesting and far more important than that simple narrative. When Jed left Ripple, the split was not simply about technology, it was about vision. Ripple increasingly focused on institutions, financial networks, regulated settlement systems, and banking infrastructure. Stellar focused on accessibility, remittances, and financial inclusion for everyday people. One network moved toward large organizations and global financial plumbing. The other moved toward consumers and underserved populations around the world. Yet both were attempting to solve a similar problem. They wanted money to move faster, cheaper, and more efficiently across borders. Instead of viewing them as enemies, it may be more accurate to view them as two different approaches to the same challenge. This is where things become fascinating for XRP holders. For years, people debated which project would ultimately win. But what if the future does not require only one winner? What if XRP and XLM were designed to serve different layers of the same financial system? XRP's focus on institutional settlement allows banks and financial firms to move value more efficiently. XLM's focus on consumer accessibility helps individuals send and receive money across borders with fewer barriers. These are not necessarily competing functions. In many ways, they are complementary functions. One serves the large financial pipes, the other serves the people using the system every day. Recent developments have made this distinction even more important. XRP continues attracting attention from institutions exploring tokenization, digital asset settlement, and blockchain-based financial infrastructure. At the same time, Stellar has continued expanding its role in payments and consumer-focused financial services. The result is something many investors never expected. Both ecosystems are finding real-world use cases. Both are building relationships. Both are attracting interest. And both are participating in the broader transformation of how value moves around the world. That does not mean every prediction will come true. It simply means the underlying story is becoming larger than the old rivalry narrative. One of the biggest mistakes investors make is becoming emotionally attached to competition narratives. Social media encourages people to choose sides. It turns investing into sports. But financial markets rarely work that way. Multiple companies can succeed in the same industry. Multiple technologies can coexist. Multiple networks can serve different purposes. The internet itself is filled with examples of platforms that serve unique functions while operating within the same ecosystem. The same principle may apply to digital assets. Understanding this possibility allows investors to think more clearly and avoid becoming trapped by tribal thinking. Another important lesson from this week is how quickly fear spreads compared to facts. A dramatic headline can travel around the internet in minutes. A meaningful development in infrastructure can take months or years to be fully appreciated. This imbalance often creates opportunities for those willing to look deeper. Instead of asking which rumor is trending today, successful long-term investors tend to ask different questions. Is adoption increasing? Are institutions participating? Is technology improving? Are regulations becoming clearer? Those questions are often far more valuable than any short-term predictions circulating online. The growing conversation around regulation also deserves attention. For years, uncertainty created a cloud over many digital assets. Investors wanted clarity. Companies wanted guidance. Institutions wanted confidence before committing significant resources. As regulatory frameworks continue evolving, projects with established infrastructure and real-world utility may find themselves in stronger positions than many people expect. This does not guarantee success. Nothing in investing is guaranteed. But it does highlight why utility and compliance continue attracting attention from major players in the financial industry. What makes the XRP and XLM story so compelling is that it highlights two different pathways toward the same destination. One pathway focuses on institutions, the other focuses on individuals. One focuses on settlement systems, the other focuses on accessibility. Yet both share roots in a vision of moving value more efficiently across the globe. When viewed through that lens, the story becomes less about rivalry and more about evolution. It becomes a story about how different technologies can address different parts of the same challenge. As investors, it is important to remember that markets are often noisy, while progress is usually quiet. The biggest developments rarely arrive with flashing lights and universal agreement. They develop gradually. They build momentum behind the scenes. Then one day people look back and realize a transformation has already been underway for years. Whether you are bullish on XRP, interested in XLM, or simply trying to understand the future of blockchain technology, that perspective can help you avoid emotional decision-making during uncertain periods. So as we bring everything together, the key takeaway is simple. This was not just another difficult week for XRP. It was a reminder that headlines, fear, and short-term volatility often distract investors from the bigger picture. The connection between XRP and XLM reveals something many people have overlooked for years. These networks emerged from a shared vision, evolved in different directions, and may ultimately serve different parts of the same financial future. Instead of focusing on rivalry, it may be more useful to focus on adoption, utility, and long-term infrastructure growth. The investors who understand that distinction may find themselves seeing the market very differently than everyone else. Thank you for watching XRP Matrix. If you found this breakdown valuable, make sure to subscribe, stay informed, and remember that the best decisions are often made when emotions are low and understanding is high. Until next time, stay safe, stay patient, and keep your eyes on the bigger picture.